Warren Buffett once said, if you don't find a way to make money while you sleep, you will work until you die. Today, let's talk about how you can turn your property into a round-the-clock money-making machine even when you are sleeping. By the end of the video, you'll have a clear plan to transform your home into a powerful engine for building long-term wealth. Let's go. But why should you listen to some random guy on YouTube? Let me quickly introduce myself. My name is Wilson Yuan, a mortgage broker and a property investment strategist. I've worked with countless of clients who have never leveraged their property equity to grow their wealth. Instead, what they do is they pay down their mortgage over 20 or 30 years only to find themselves in a tough spot at retirement, which forces them to sell and downsize just to free up some cash. But if they only did this one thing, leveraging their home's equity before they retire, they could have drastically changed their financial future. So let me show you how this strategy can work so you can secure your own financial future. Equity, in the simplest terms, is the portion of your property that you truly own. It's the difference between what your house is worth and how much you owe on it. Nothing new, right? But here's a key question. Are you using it? A lot of people have equity just sitting there, tens or even hundreds of thousands of dollars worth, but they don't realize they can put it to work before they are forced to use it in retirement. Here's an example. Let's say you have a property that's valued at $800,000 and you still owe about $300,000 on it. That means you have about $500,000 of total equity that you have available. Now, banks will allow you to access about 80% of the home's value, which is around $640,000. Subtract the mortgage of $300,000 and now you end up with about $340,000 of usable equity, which you can use to now acquire assets that can grow in value and generate passive income. Now, to know how much equity you actually have, banks will need to perform a valuation on your property. Now, how do I use this equity without losing my home? You've probably heard about cash out refinancing or equity loans, which let you access your home's equity without forcing you to sell. Here's how a typical cash out refinance works. First, you refinance your current mortgage so the bank can appraise your property and figure out how much usable equity you have. Then the bank lends you the additional funds based on that equity, allowing you to keep your original home while using the newly released funds for something like a down payment on a new investment property. When you're buying a new investment property, you can structure this new loan so that it's tax deductible, as long as you separate this investment debt from your personal home loan. This structure is crucial to ensure you don't lose any potential tax benefits. Once you acquire this investment property, you can benefit from both the capital appreciation and the rental income. Historically, Australian property prices have grown around 7% per year, which means a property could potentially double in value every 10 years. Meanwhile, any rent you collect goes towards servicing your loans and eventually adds to the overall cash flow. By using the equity to build additional properties over time, you're essentially building a property portfolio that could significantly increase your net worth. But a word of warning, not all investment properties are winners. Consider this cautionary tale. This property at 883 Collins Street in Docklands was originally purchased in 2015 for $766,000 and is now worth only $610,000, a $156,000 loss over 8 years without accounting for any of the holding costs. This underscores the importance of choosing the right property in the right location, because not every market or property will appreciate at the same rate. I'll cover this more in another video. Now, why act before retirement? It's simple. The earlier you start leveraging your equity, the more time you have to grow your investments and benefit from any potential gains. Waiting until retirement often means selling your home at a stage where you prefer stability and multiple income streams. By taking action now, you can set yourself up for a more comfortable future, one that doesn't rely on your super or pension. So there you have it, a roadmap to transform your home into a money printing machine. Remember, with the right strategy, your property can be so much more than a place to live. It can be the foundation of your financial freedom. If you're ready to take the next step, please reach out for a free property valuation or a personalized consultation. And if you want to learn the 3 biggest mistakes homeowners make when leveraging equity, click on the video on your screen above. Don't miss it. Your financial freedom depends on it.